Ladies and gentlemen, good day and welcome to the CSL Finance Limited earnings conference call for Q2 FY 2021 hosted by Kannav Capital Advisors. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Gaurav Sood from Kannav Capital Advisors. Thank you and over to you, sir.
Thanks, Melissa. Welcome everyone and thanks for joining the Q2 FY21 update call for CSL Finance Limited. To take us through this update and answer your questions, we have today with us Mr. Rohit Gupta, Managing Director and Promoter, and Mr. Chandan Verma, Wholesale Credit Head. We will be starting the call with a brief overview of the last 6 months' performance and then follow up with a Q&A session. I would like to remind you all that everything said on this call that reflects any outlook for the future, which can be construed as a forward-looking statement, must be viewed in conjunction with uncertainties and risks that they face. These uncertainties and risks are included but not limited to what we have mentioned in the prospectus filed with SEBI and subsequent annual reports which you can find on our website. With that said, I now turn over the call to Mr. Rohit Gupta. Over to you, Rohit.
Thank you, Gaurav. Good evening, everybody. CSL Finance welcomes you to Q2 for 2021 investor con call. Thank you for taking up the time for attending this call. We hope you and your loved ones are safe and healthy in this stress.
Mr. Gupta? Mr. Rohit Gupta?
I'm Gaurav here. I think he might have dropped off. So can you try connecting him again?
Yes, I'm just doing that. Ladies and gentlemen, we have Mr. Rohit Gupta reconnected to the call. Thank you and over to you, sir.
Yeah. Sorry, I think the call was disconnected. So I was covering that pre-provisioning profits have significantly improved in this quarter by 15% to 10.61 crores as compared to 9.22 crores in last quarter. But PAT declined by 5.38% to 6.86 crores in quarter two as compared to 7.25 crores in quarter two of the last financial year. The decrease in PAT was majorly driven by COVID provisions being maintained at 4.61 crores. For half-year numbers, our net interest income grew by 7.26 crores, 7.26% from 23.69 crores to 25.41 crores. Our PAT has shown a marginal growth of 6% from 13.79 crores in half year for the first year as compared to first half year as compared to 13.88 crores in this the last financial year. To higher risk of defaulting repayment post-COVID lockdown, our main focus has been on collections. Our collection team has been in regular touch with the clients through telecommunication or face-to-face meeting. Our collections have increased by 63. Collections has increased by 63.74% to 87.29 crores in quarter two as compared to 53.31 crores in quarter two of the last financial year. It has materially increased on quarter by 177% from 31.42 crores in the first quarter. Hello?
Yes, Mr. Gupta.
Yeah. Our collection efficiency has been 85% in the retail segment, where collections have been impacted largely because of school loans. Our AUM increased by 5.53% to 335 crores in quarter two of this financial year as compared to 317 crores in quarter two of the last financial year. The AUM growth has been lower due to high collection and our cautious approach towards new sanctions and disbursements. Our disbursement for this quarter has in fact increased by 66% to 90 crores in quarter two of this financial year as compared to 54.09 crores in quarter two of the last financial year. The lower growth in AUM is largely due to higher collection in spite of higher disbursement. Now coming on the operational update, our wholesale lending AUM stands at 269 crores as on 30th September 2020 as compared to 249 crores as on 30th September 2019. It consists of four segments: wholesale large, wholesale small, wholesale LAF, and loan against securities. We have explained all these four segments in our con calls earlier. The wholesale loan to mid-income group housing and affordable housing has been our main focus area since we started lending, but gradually we are shifting our focus towards wholesale small and SME retail segment where the loan tenure and the ticket size are smaller, and so we can avoid concentration risk. AUM of wholesale LAP and LAS increased by 120% to 66 crores in quarter two financial year 2021 as compared to 30 crores in quarter two financial year 2020. This was largely due to two loans that got disbursed in this quarter. Our SME segment AUM stands at 65 crores as on 30th September as compared to 69 crores as on 30th September 2019. The decline in AUM is largely on account of higher collections and cautious approach towards new sanction and disbursement till economic activities achieve normalcy. In first 4 months of this financial year, the disbursement was very marginal. So because of that, because of the higher collection and practically nil disbursement in first 4 months, the AUM has come down. Our SME portfolio consists of both secured and unsecured loans, with over 90% loans being secured. We give unsecured loans only to K-12 schools, where we have capped the ticket size to 5 lakhs per loan, and the total portfolio of unsecured loans amount to 6 crore as on 30th September 2020. The COVID-19 pandemic has impacted the business across the segments, and the NBFC with weak balance sheets has been the biggest loser. We have been able to minimize the risk on our loan portfolio due to our prudent lending practices and close monitoring. We are not facing any stress in our existing portfolio except for school loans, which we expect to become regular once the schools open. We are present in a rural and semi-rural area for our retail segment where economic activity were less impacted due to COVID-19, and that has helped in better performance of the retail portfolio. Performance of SME portfolio is as per our expectations, and collections have improved to 75% overall. If we take out the school loans, where the collections is roughly around 60%, the collection efficiency is 85% for the remaining SME portfolio. Our wholesale loan portfolio has performed quite well. We have received repayments of 88.68 crores during this period against the total outstandings of 269 crores as on 30th September 2020. We have always been prudent in our operations and maintained LTV of around 45%, and given that the peak stress for this segment is behind us, we do not foresee any big challenge in this loan portfolio. Furthermore, most of the funded projects are either complete or near completion. So the execution risk is no longer in play, and these projects expect sizable committed receivables from the sold but undelivered inventory. Now coming to provisioning, we have a gross NP of 0.25 crores as on 30th September, which has been covered fully by the ECL provisioning. Our net NPA is almost negligible. As a prudent risk management practice, we have already provided ECL provision of 6.33 crores under stage 1 and stage 2 of our portfolio. Loans under stage 3, that is 0.25 crores, have been fully provided for. To the treasury update, the NBFC sector has been facing challenges post-lockdown due to rise in NPAs and liquidity challenges, thanks to RBI, which has introduced liquidity scheme for the NBFCs. The liquidity has eased up now. We have also been beneficiary of the RBI liquidity scheme and were able to raise 40 crores of private placement of NCDs during this quarter. We have a comfortable level of liquidity and have maintained cash and cash equivalents of 19.63 crores as on 30th September. We have repaid 12.91 crores of our loans, including prepayments of 7 crores in Q2 financial year 2021. We have successfully issued NCDs of 30 crores and replaced high-cost debt with low-cost debt, which led to decline in interest cost by 20 bps during this quarter. Our net debt has reduced from 96 crores as on 31st March 2020 to 86 crores as on 30th September 2020, which includes the private placed NCDs of 30 crores. Our CRR stands at 73% as on 30th September 2020, which is one of the highest among NBFCs of our size. Thanks everyone for participating on the phone call. Your questions are important for us, and we strive to be transparent in our investor communication. Economic activities have now started picking up, and with good monsoon and increase in rural activities, we think that worst is behind. We aim to maintain the high quality of our balance sheet while striving to grow our business in the coming year. Look forward to connecting with you all after the March 22 quarter result. Thanks. Now you have for questions, please.
Thank you very much. We will now begin with the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Ankit Gupta from Bamboo Capital. Please go ahead.
Yeah, Rohit, thanks for the opportunity, and congratulations on a pretty resilient set of numbers and good collection efficiency. Rohit, on the wholesale side, if we look at it, we have seen the worst of the times, and this book has largely been pretty resilient for us. We are still having prepayments in this bucket, in this segment. So, earlier when we used to talk to you during con calls, you used to say that, bankers have been pretty apprehensive about the wholesale lending, and they have been telling us to focus more on the retail side. And I think as a management also, we wanted to focus more on the SME part. So, given the kind of collections we have seen in this segment and, the resilience nature, at least for our portfolio, any views on how this segment any strategy, any changes in strategy for this segment, for this wholesale segment going forward? And do we now look forward to growing this segment at in the coming 2-3 years or over medium to long term?
Thank you, Ankit. So, as you rightly said, for us, wholesale has been our main earning segment for us, and in spite of a very difficult period for last 4-5 years, we have been able to perform reasonably well as compared to the problems which are being faced by the segment which we are in. This is especially basically because of a few of parameters which we have always maintained in our credit policy around this segment, which we say we look for projects which are affordable in nature, where the people can live in location-wise, and which are nearing completion or where the sales have already happened and there is a very certain stream of cash flows, predictable cash flows coming in for the completion of the project. So that has been our basis for choosing those projects, and till date we have been able to perform reasonably well. And now we are seeing that even this segment is also picking up. Last 2-3 months, sales have been really very good as compared to what we were expecting. And we would say the worst part has also been passed during last 4-5 years, where we have seen demonetization, GST issues, the RERA coming in, and with this COVID. So already this segment has already faced a lot of stress, and so going forward for us, as we think that we have reasonable domain knowledge of this segment, we will definitely like to maintain and grow in this segment. And even now the number of players have little bit reduced. The bigger NBFCs are not focusing too much, are not focusing in the size with which we are. So definitely we will like to grow in this segment and along with the retail part.
Okay. And so now on the disbursement part, Rohit, we have almost 90 crore of disbursement during the quarter, which has been one of the highest in the past 5-6 quarters that we have seen. So and looking at how the rural economy and the overall economy has recovered across the country, do we think that second half we will see some growth in our AUM? And any kind of outlook or any kind of guidance that you would like to share over the next 2-3 years? What kind of growth are we targeting, since the worst seems to be behind us?
We talk about next 2 quarters, definitely we are very hopeful that our AUM will also increase, and we are sitting on unutilized credit facilities of roughly around 50 to 55 crores, which we think we'll be able to deploy in next 2 quarters. From the last quarter, the biggest challenge has been that the collections were very strong, and primarily because we have an escrow on all our projects, and if the sales and collections are good, then the prepayments start increasing, which we have seen in last 3 months, and even our first 3 months of the first quarter were also reasonably good, seeing the situation at that time where most of the country was under lockdown. So in spite of that, in the first 6 months have been very good for the collection side, and the challenge has been a little bit, as we were a little cautious for first 4 months. So the challenge has been on the disbursement. Now for in last 2 months we have done reasonable sanctions and disbursement in this segment also. So we are quite hopeful that in next 2 quarters our AUM in this segment will increase and overall AUM of companies will also increase. But to give any number or percentage will be a little difficult. As still COVID is not over, and we are primarily focused on those projects which are nearing completion or which are in affordable segments. So all those opportunities coming in our area where we are only focusing in the NCR segment, where we think that we have reasonable domain knowledge, or area around NCR in Chandigarh, around Chandigarh and somewhere in Jaipur side. So we are quite hopeful that our AUM should increase in next 2 quarters, and I will be able to give better picture for the next coming years, I think, in the March con call. So.
Okay. Yeah. And on the collection efficiency on the SME side, Rohit, the 85% X school collection efficiency that you talked about, that is for the month of September or October?
That is for the month of September.
Okay. And how has that trend been in October and current?
October has been same. I would not say it's very high, between 85 to 88%.
Okay. So because, we also track a lot of microfinance and other NBFCs focusing on SMEs and, loan below 10 lakhs. So many of these NBFCs, well-run NBFCs, are reporting collection efficiency above 90 to 93%. So and are seeing month-on-month improvement in collection efficiency. So for us, it is relatively a little bit lower if we are around 85-88%. So any views on how this collection efficiency on the SME side is expected to be over the next 2-3 months?
If you see, but if we just bisect our SME portfolio, our collections have been very good in Rajasthan and Gujarat. We have faced challenges in few of our branches in Punjab and Haryana, and otherwise in few of our branches our collection efficiency is more than 90 to 95% also. Few of the branches are doing even 100%. So these are few branches, namely 2 or 3 branches, where our collection efficiency is little lower, and that is also the loans which we did in the initial phase when we started our SME, where our credit policies were not refined and our processes and were not properly, you can say, were lacking somewhat, and that was those loans where we are seeing certain challenges. And if we just take out our first year of operations, if we just take, then our collection efficiency is more than 90% in each and every branch. So I would say that was the first year of operations of SME, that we just take out those loans. So we are doing reasonably good. The other part which is affecting on us is the school loans, which were very, very good till before March, before lockdown, where our collection efficiency has been more than 98%, 99% in school, and where we are down to 60% right now. And we are quite hopeful as the school open, and after opening within 2 to 3 months, we are very hopeful that we will see that portfolio will also come back and with the same kind of collection efficiency.
Rohit, how much is the total loan book to schools? Is it just the 10% of SME unsecured book which is given to schools? Some part of the secured book also includes.
Secured also, we roughly have around 22 crores in the total school segment, which includes 6 crores of unsecured part.
Okay. And the collection efficiency there has been
60%, 60 to 65%.
Okay.
Yeah.
Okay. Thank you. I'll come back in the future.
Thank you. We would like to remind participants that you may press star 1 to ask a question. The next question is from the line of Siddharth Agarwal from Prudent Value Partners. Please go ahead.
Hi, good afternoon, Rohit, and congratulations on the good performance given the challenges in the industry. Sir, how are we seeing the real estate pickup sector demand in the NCR now?
I think let Chandan explain something, then I will come on this question.
Sure.
Chandan.
Yeah, hi Siddharth. Overall demand that we are finding the traction, too much traction in some of the areas of the NCR. Gurgaon is doing exceptionally well in the affordable. Only the high ticket size segment that is not moving well into the market. Otherwise, the ticket size less than 60 or in between range to 30 to 60 is picking up very well. Apart from that, the affordable segment that ranges between the less than 30 to 10 lakh rupees housing is the demand is on a very bullish side, and almost all the inventories, whichever the project is launched into the affordable segment itself, it has been managed into the 1 or 2 months of the launch itself. In Noida West, definitely the portfolio of Noida West or the housing, retail housing in the Noida West there is a lot of traction in the Noida West market, and the demand is too much there, and we are finding that the lot of buyer and the movement is there in the housing side or housing demand side.
Okay. And
yes, just to add, if we just see the projects which are nearing completion and are affordable in nature, and location is where the location is good, we are finding that the reasonable traction is there. The sales have improved, where we used to see that the projects are selling between anything 0 to 10 units in a month. Now they are back to, I would say, 10 to 25 units in a month, which is not very huge as compared to what it used to be in 2013-14, but reasonably very good. And mostly it is end consumer demand. So the projects which are affordable in nature with good location and certainty of getting completed are finding buyers. And those, especially in Gurgaon, where we are into wholesale, small builder floors is doing exceedingly good. And the same is the case in South Delhi. The only issues with the high ticket housing projects, which are more than, I would say, 1.5 crores, where the demand is lukewarm. So otherwise the sales for last 2-3 months have been very good, and which you can also, I think, if you are reading any of those real estate commentaries also, the demand is reasonably good.
Okay. And Rohitji, we keep on hearing about, a lot of consolidation that is happening on the builder side, and, so basically, the expectation is that bigger or established players are going to take larger market share, and they are going to, launch more and more projects. But that is not our target segment when we try to lend. So in our target segment, the smaller builders or, mid-sized builders to whom we target to lend to, do you see an appetite for them to come up with, launch newer projects or launch pipeline, or for us, the deal pipeline for us? How does that look?
Yeah, definitely, because the consolidation is bound to happen. Whenever we see in any industry where the boom to bust happens, the consolidation is definitely going to come. And even when we say everything will go to the very large players, that may not be possible, because when we talk about affordable is a segment where we have seen, if you have gone through the commentary of the DLF, even the Godrej, the bigger ones, they have not entered into the very affordable kind of a segment, because it's a segment where your speed, your cost control, your hold on the local area within the authorities and all those is very important, and even we have good broker network. So the smaller players who have focused and with the fund, who are working with reasonably good financial prudence and with the right kind of good locations and financial closure, they will continue to come up with new projects. And a lot of our existing borrowers have launched new projects in last 2-3 months, a little bit to our surprise also, because and we also feel that the lot of learning has also gone to these builders. What the mistakes they have committed earlier, they are much more prudent and much more, I would say, smart, and they have learned from their mistakes. And going forward, if you ask me, I see very less. Even this is one of the segment where it is very good for the lenders to lend, because now the borrowers have become very prudent. They are cost conscious. They are conscious of each and every cost, maybe the borrowing cost or the project cost, and they are putting a lot of thought and effort before launching any project. So, and going ahead, there will not be too much inventory finished or in the pipeline. So they will be skewed in the going forward next 2 to 3 years. We see that the supply may be less as compared to the demand. So the builders who have been good, and they will continue to perform better in the coming years. So for us as a small lender, we always see that if we have our USP in terms of better financial closure of the proposals and a more practical approach, and with the domain knowledge which we have built during last 7 to 8 years, we think that we'll be able to find space and will be able to grow our business in this segment.
Okay, great, sir. And Rohitji, what is the collection amount in the wholesale segment during the quarter, and are our customers, any of our customers, still postponing the payments?
Customers means that our borrowers or the customers of our borrowers, the end consumers?
Our borrowers, are they?
So more or less in the first quarter, about 66% of the borrowers have gone for moratorium, but now in this quarter we have not given any moratorium to any of our customers, and moreover, if you see, our collections are more than 88 crores, and which substantial part is prepayment. So none of the borrowers, we have not seen any many of our borrowers. So the collections have been very good on part of our borrowers, and the same is reflected in our collections also.
Okay. And sir, we have done extremely well in the wholesale LAP. So for this quarter, could you just tell us a little bit more about what is the typical duration, LTV, and the IRR for this product? And from a portfolio perspective, can we reach this to say 100 crores in this year, till 21?
Can I answer? Sorry?
Yeah.
So that's the thing is that the LAP is a category where we are primarily focusing into the doing loan totally against the kind of term loan structure that is particularly against the properties, right? Only 2 or 3 loans are there which are the kind of which are provided to the builder. Otherwise, most of the loans we have around 10 or 11 accounts into the LAP portfolio. Most of them are to the MSME or a kind of a businessman who have availed LAP from us. The average LTV kept in the LAP size is around 45 to 50% on the maximum side. In some cases, we have 30%, and on the portfolio side, the average LTV of the LAP is 40%. Right? Now, on the future perspective, look, we are not that much focused into the LAP. Reason being that receivable is not that much hypothecated into the LAP portfolio itself. We are focused on wholesale large and wholesale small. Once the receivables could be screwed, and we have an exact control on the receivable part. So the LAP part, we are not seeing that much opportunity in the LAP business. Yes, we are focusing into the LAP segment, and we are only doing LAP to those customers who are very much known to us, and we are very much confident on their profile, portfolio, and the business itself.
Okay. Just to add on, Siddharth, what he means to say, LAP will not be a focus area for us. It's just opportunity based. Sometimes we come across good proposals where we think that this proposal will give us good IRR, and we have a good strong security, and the repayments are predictable. Otherwise, because as Chandan rightly explained, we are focused on only those wholesale segment portfolio where we have an escrow on the receivables. So where we get regular receivables and we have a control on their receivables. So and LAP is not our area where we say we can build a huge domain knowledge, but the real estate segment, whether it's affordable or bid housing, we think that we have reasonable domain knowledge of that segment in our area. So we like to continue to focus on that. It is only an opportunity based. So we can't predict on the size or building up this portfolio too much.
Okay. Great, Rohitji. And Rohitji, you in previous to answering while Ankit's question, you did mention that that there has been some change in our credit policies which have resulted into better collection efficiencies in the loans which have been done in the later part in our branches. So could you tell us a little bit more about how if we have started disbursement in the SME retail side? Hello, can you hear?
Yeah. Now I'm able to hear you. Yeah.
Okay. So my question is, sir, have we started disbursement on the SME retail side? And how are we screening our potential customers, and any changes in our credit appraisals that we have done in the last, as you mentioned earlier, that there have been some changes which have resulted in better collection efficiencies for the later part of the loan. So if you could tell us a little bit more about how we have improved our credit process.
Yeah, so that in the earlier, I think in the very first year, which was 2016-17, when we started our retail. So this was a new segment to us. So the credit policies were also evolving, and even over a period of time, we realized that even the processes has to be fine-tuned. So and some even on the recruitment side. So we fine-tuned all those where the processes or policies need to be improved, maybe on the HR side, on the credit side, on the processes side, where we found that there are few lapses, which we have done. So that has been a year of, you can say, a year of learning for us, and that could be for any company which start any new segment. And so what was your second question, second part?
So what, if any, in the credit appraisal, so how are we screening our potential customers? Any, changes that we have done so that we can understand how it is being done better than what it was done in the past? If anything possible to, throw some light on this.
The kind of customers we are dealing with those are in our unorganized segment, where you don't get any bank statements or any audited accounts to fall back on, and it is your to do on while meeting the customer and analyzing the customer, what he has done during last 5 to 10 years about the business, what he is doing, and get the references you are getting. So based on that assessment, we have find that the credit policy is always ever evolving. Whatever we keep on learning, we keep on adding to our the credit policy part, or even on the processes part. And so Chandan, if you like to if you want to explain in little what in detail how we have fine-tuned our credit policy.
Definitely. So there are few changes that we have done majorly into our credit policy. Actually, we have divided the thing into the two parts. That is firstly on boarding of the client itself. So earlier, what we used to do, there are certain parameters. Like for the school loan itself, we were going through the numbers. We checked the number of the students from register system. But now we added few of the parameters that soundproof our credit quality. So the parameters, the number of actually earlier also we used to do on the same parameters, but now what we have evolved that the number of parameters on the credit list check. Like earlier we are able to board around the 600 kind of CIBIL score customer, but now we have raised it that the 700 would be the benchmark on which we will be building up the customer base itself. Second thing, like the various parameters has been added into while appraising the different kind of the customers. Separate camps has been prepared for the each kind of industry. Like for retail segment, retail shop, we have made a different camp. Reason being earlier, what we used to do that there would be a kind of a single camp on which every customer was assessed on few of the parameters. But we have built in during the evolution itself, we have built in the various parameters, and we have evolved different kind of camps for the different industries. Like for retail, we have a different camp for appraising a school loan, a dairy loan. We have a different camp for each and everything, right? So that is the kind of credit evaluation or credit process evaluation we did into the credit policies. Now on the credit management part, that is the portfolio management part. Earlier, what we used to, generally in all the NBFCs, what happens in the case of term loan, whenever the customer is boarded, then there is a very less requirement that the quarterly or a kind of a 6 monthly call memos are submitted on the performance of the loan itself. So we have started identifying the customers that how the portfolios are performing, and based their performance, we started submitting the call memos itself for like what are the reasons that the customer's cash flows are not coming or there is any delinquency into the account. Yes, it is there. So the policy of submitting the quarterly or a 6 monthly call memo is also involved into the portfolio management part. Even if the state heads, branch heads are asked to meet the customers on yearly basis, so that a kind of portfolio review and a portfolio monitoring could be done.
Great. That sounds very comforting, Chandanji. Okay, I think all these changes have resulted into better portfolio performance as well, and I hope this will continue on. I have a few more questions, but I will fall back in the queue and I'll let other participants ask, and I'll come back if there is time. Thank you.
Thank you. The next question is from the line of Ajay Sharma from Psychis Investment. Please go ahead.
Hi, thanks for taking my call. I just had a couple of questions. The first one is for Mr. Gupta. Where do you really envision the company in 5 years, or even in 10 years? Do you think that the company will still be giving the same kinds of loans that it's doing now, but at a larger level, or do you think the loan book might become more granular? What do you think, a normal rate of growth is? Yeah. Can you hear me?
Hello?
Yeah. Can you hear me?
Hello?
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 Can you hear me?
Hello?
Mr. Gupta,
Yeah.
we can hear you, sir.
Yeah.
Can I ask my question again?
Yeah, please.
Yeah. So I was just asking, where do you see the company in 5-10 years? What kind of lending products will it offer? Will it be doing the same kinds of lending that it's doing now, but at a larger level? Will it be a more granular loan book? What would a normal rate of growth be? Can you just provide, your long-term vision about CSL Finance?
Yeah. I have seen the last 2 years has been very difficult for the NBFC. The way we thought we would be in 2 years before, after the DHFL and a few of the bigger one. So the fundraising has become a little bit difficult, and we have been very cautious on the cost side also. Now, in last 4-5 months, that has eased on. So this year, our motto has been to sustain ourselves, to maintain our quality loan book, and to add on low cost of borrowing if possible. And as you're talking about 5 to 10 years, it is, I would say, a little long, but yes, definitely. What we have gained a lot of confidence from what we are doing, especially in the wholesale, and now as we have also learned from our mistakes on the retail side also, and we would like to grow the existing both segments, because one thing we know that we will not be able to go into the segments which are being in the immediate, which are being you can say the domain of the larger NBFCs or banks. As for us, we can't go into a product with an IRR of you can say 9 to 14-15%. Definitely, we'll have to build a domain knowledge in those unorganized retail segments, where because of your domain knowledge which you build around your credit policies and processes, and if we are able to show our expertise and build a domain knowledge around that, we'll be able to grow in that segment, and there's still a lot of scope in that segment to grow. And even on
Hello.
So the line for Mr. Gupta has been disconnected.
Okay.
Kindly stay on line till I reconnect him. Ladies and gentlemen, we have Mr. Gupta reconnected to the call. Thank you, and over to you, sir.
Yeah, sorry for that. And so primarily the existing two segments will be our core focus areas in the next 2-3 years. Our focus will be to add on more lenders in our profile, as we have been doing it. As we have done, for the very first time, we have been able to raise funds through NCDs, and there was a lot of apprehension among our lenders about the wholesale segment where we were in. Now, even those lenders and our rating agencies are much more confident. So going forward, the biggest challenge for the NBFC segment has been to raise funds on the liability side. So that will be a core area to focus on to build our liability side and to grow our existing segments. And so I think to adding other areas, other segments, I think it will be a little too premature. For next 1.5, 2 years, we are going to focus on the existing segments only.
Okay. So broadly, you'd say that at a balance sheet size of maybe 500-700 crores, the company would still look very similar as it does today, right? With the same kind of lending profile. Yeah,
because we still see there's a lot of opportunity, and if we are confident in the existing segments, I don't see the unless and to add on. Because as a smaller company, first we have to build ourselves as a reasonable player in that segment itself, then going into adding to a few other segments. So that has been our approach, and going forward, there's a lot of opportunity where we have not expanded in terms of branches during last 12 months, which we are hopeful that we'll be adding branches in next 12 months in a few of the states. And with what kind of learning which we have got during last 2-3 years, both on the retail side and what our experience, what we have got on the wholesale. So we will continue to focus on the existing these two segments and build our growth to expanding to newer areas where our presence has not been.
Okay, and just a quick question about the branches. So are the lending decisions made at the branch level or are they made at the headquarters level?
So there's in existing setup, there's a credit manager at every branch who sanction a proposal, but the final go-ahead only comes from at the center level, which is very fast, where the pre-sanction powers have been given to the branch credit managers. The final approvals are being done by the center level.
Okay, I understand. And a little while ago, you mentioned that the competition in the sector might have come down over these last few months. Do you see this as a structural change to the NBFC sector, or do you think that when good times come back, the competition will come back up?
Definitely, because in the segment, there was a lot of apprehensions in last 2-3 years about the wholesale segment, and there were certain things which have gone wrong in the larger NBFCs, which have given a wrong, I would say it's a little difficult segment to be in. But going forward, as we see, this segment is very good, and now a lot of, I would say not NBFCs, but real estate specific funds are focusing on for last 12 months. And I do see that a lot of NBFCs which have stopped funding will come back. But if we are able to build our USP in our region, we definitely see that we'll be able to get business and expand ourselves. And now we have become quite competitive in terms of the IRRs which we are offering to our borrowers as compared to the larger players also.
Mr. Sharma, I would request you to rejoin the queue. We have several participants waiting for their turn. Thank you. The next question is from the line of Rahul Jain from Credence Wealth. Please go ahead.
Yeah, thanks for the opportunity and congratulations for also having a decent balance sheet in a tough environment. So, Rohit, first question for you. We understand last almost 6 to 8 months have been quite tough given the environment in which we are. So, but as we speak, more and more sectors are opening up. Economy seems to be coming back on trail. Certain sectors doing much better than what they were in pre-COVID levels, and certain sectors are still here to reach those kind of levels, especially the school segment which we are talking about. So, sir, my first question to you is, like what we have been hearing from most of the companies is the initial first 2 quarters, most of the management spent a lot of time on collection was the main focus area. So from your side, sir, what were the 3 focus areas in last 6 to 8 months? And for next 6 to 8 months, what are the 3 focus areas which you spend your time on?
Yeah, in last 6 to 8 months, and primarily after lockdown, first 4 months, namely April, May, June, July, we were more focused on collection and visiting and meeting our existing borrowers. In case of wholesale, having one-to-one meetings with those borrowers. At the same time, telling our credit team, back office team, operations team to improve our processes. We really relooked each and every of existing borrower, and there was a complete audit done, and we relooked our credit policies. So that has given a lot of in this 4-5 months have given a lot of time to improve our existing processes and policies and to have a relook at that in the changing environment. And yes, definitely the last 2 months we are looking for building our business, and in spite of having unpredictable high collections in our wholesale side, our focus has been on the disbursement. As you can see, we have done a disbursement of 90 crores in last quarter, which was higher than even what we have done in the previous quarter of last year. So now even we have started telling on the retail side also for last 1.5 months to focus on the business, and prior to that where our collections and improving the processes was the main focus area. Yes, for next 4 months, growing our business will be the main focus area, but at the same time we want to be cautious. Still few of the segments are in a difficult position. Still we are not out of COVID. So we will always be cautious and prudent, but now the focus will definitely be on building our business.
Sure. And sir, given your experience in the various segments which you operate, and as you mentioned in previous questions also, that you have developed some kind of domain expertise in certain areas of lending. But apart from, so as we speak today, any of these segments where you feel now you would focus more compared to some other segments? So on one side, a segment where we will have now much more focus, and on one of the segments where we are experienced or based on our learning, we feel probably in this segment we would defocus, something like that?
No, I would just, only the change of strategy, what has happened is we were little very cautious on the wholesale side, even prior to lockdown also, because our lenders and borrowers were very cautious what was happening in this industry, and there was a you can say a caution around the industry. So we deliberately were not very aggressive, which though we always felt very confident. So that will be again our focus area going forward, along with the retail part where we have said we have learned from our mistakes also, which we did in a little bit in our first year of operation, and a lot of effort has been gone into building our policies and processes around that. So definitely next 6 months our focus will be just to grow our business.
So basically no change in the focus on the based on the segments which we are into already.
Yeah. If we are doing reasonably good, we feel that we are confident in those segments, and that will be the segments where we can grow. So I think we see no reason why we should look for other areas.
And sir, with regards to segments and the areas in which we operate, typically who are our direct competitors, if you could name some of them? I understand a lot of NBCs are there, but if you could name some of, like, when a borrower is there or when a borrower wants to approach, so he would approach a CSL Finance, and apart from that 2 or 3 other companies which he would generally come to?
Yeah, if we say in the wholesale segment earlier where even Reliance, DHFL, Indiabulls, IFL, Edelweiss, they were very aggressive. Nowadays, though our size is very, very small, there are a lot of funds which have come, which are like Cortelia, ASK, Raymond James. Those funds are very are doing on the real estate side, and few of the companies, IFL still active, and a few of the banks also, AU Finance and other banks. So, but still, because of our, you can say, domain knowledge, our presence in our area, and our the USP around faster assessment and faster disbursals, and so that will continue to remain, and the sizes are limitation otherwise. So most of the proposal will come to us first and then goes to other lenders. So that we have built a good reasonable marketing network in our existing area. And coming to retail, I would say that there are a lot of every company, a lot of banks and NBFCs are there. So, but we are primarily focused into the unorganized segment where those borrowers are not supported by any kind of banking or any GST returns. So in that still you can say companies like AU Bank is there, the smallest, the Capri and Mathur, all those companies are active, and yeah, this competition is definitely there. Yes, but we have to you build your presence through your faster disbursals. That is one of the USP which one we have to have, and better understanding of the profile where we are lending.
Sure. And sir, impact figure or kind of number which you could share in terms of where do we see our AUMs 18 months from today? So somewhere, where could we end FY22 with what kind of number?
We have never given these kind of forward-looking numbers in any of our previous phone calls. So definitely, I would only like to say that we will definitely like to, our aim should increase in next 4 months as we have sufficiently unutilized limits of around 55 to 60 crores, and we are hopeful of raising another 20 to 40 crores. So, and to give numbers for the next year, I think the March will be the right time to give those numbers.
Sure. So you said utilize the existing around 50 to 60 crores of limits and additional credit facilities of 20 to 40 crores till March of the current year. Is that correct?
Yeah.
Sure. And so last two questions. One, on the credit side. So in the current year, what kind of credit cost do we expect? And typically, how many borrowers would have not paid a single kind of installment till date?
On the retail or on the wholesale side?
Overall, from the book, like how many borrowers and what could be the amount of that whereby a borrower would not have paid a single EMI?
On the wholesale side, roughly around a portfolio of 260 crores, I would say there is only one borrower of 96 lakhs who has not paid a single EMI till lockdown. And where we have already we are fully secured in terms of where LTVs are less than 40 to 45%. But that borrower has not paid a single amount because they have availed the moratorium, and last 2 months they have not paid. On the SME side, you can say apart from school loans, which may be roughly around 90 to 100 customers out of a total book of 1100 customers, and roughly around you can say 50 to 70 customers on the SME retail side.
The credit cost for the current year could be around?
It depends. The major credit cost will be coming from the school side, so which have been very regular. Our collection efficiency was 99% on the school side. It is only that schools are not allowed to operate. All our schools are based in semi-rural areas, where even they are not able to properly give classes through electronic mode. Neither the students have that kind of, you can say, infrastructure to support that. So where the fees are not coming, and the only answer which we get is whenever the schools will open, we will pay. Though we have a security in terms of schools or their private houses, the private property of the borrowers. In terms of LTV, we are fairly secured, but yes, that is one area where out of 22 crores, you can say 10 crores of schools are not paying till date, which we have already provided roughly around 4.6 crores. We have ECL provision, and we have been aggressive in providing, making provisions whenever it is required. And apart from that, we don't see too much challenge coming from wholesale or the retail section. School is only one area which is temporary and understandable. Otherwise, which was very good in terms of regular the repayments have been extremely good prior to the lockdown.
And I would also like to add one point, Rohit. Now the thing is that in school loan also, 100% of our customer has been met by our branch team and even the state heads also. And we are very much confident that once the school would start their resumption or resume operating, we would be able to collect 100% of their EMIs. We are not finding that any of the customer is having intent to default. But yeah, the problem is there, and we are 100% sure that all the portfolio of the school loan would be also regular once the school start operating.
Sure. And so last question about cost of borrowing. So where do we see the interest rates, and what is the incremental cost of borrowing for us? Interest rate on NCDs?
All of borrowing what we have done has been sub 10%, and even our weighted cost of borrowing has come below 10%. And we have prepaid loans which we were having around 11 to 12%. So if we want to prepay roughly a very small percentage out of 96 crore borrowing, we have roughly around 10 crore more than 10% cost of borrowing, and where the prepayment charges are too high. Otherwise, we are very keen to prepay even those loans. So our cost of borrowing is less than 10% as of now.
And the incremental borrowing is also at around
below that. And we see going forward, if that we raise at a little more competitive price rates, rating has been one deterrent for us. And going forward, if we are able to improve it, definitely then the cost of borrowing will come down.
Sure. Thank you so much, Rohit, and wish you all the best. Thank you.
Thank you.
Thank you. The next question is from the line of Anand Jain, an individual investor. Please go ahead.
Thanks for the opportunity. One question, Rohit, that I have is that we say that retail collection efficiency is around 85% till September and 88% until October. So what kind of buffer have we built for the defaults in that segment? What are the expectations around, the remaining 12-14% who are not paying until now?
So, we have provided roughly around 4.6 crores as a ECL provision for stage 1 and stage 2. And we primarily take this into for this SME part. So it's roughly, you can say, around 6 to 7%. And in every quarter, even this quarter, we have provided 1.38 crores. That was totally on the SME segment. Where even we have reasonable securities, but we are based on we have very conservative. We are fully provided in our books. So yes, definitely schools don't start repaying us in next after February or March. Yeah, we may see that out of 22 crores, we have 10 crore of the accounts are not paying. We may have to provide in next financial year, but I'm very, very hopeful that schools are bound to open, and school will always be we can't see the economy or society without schools. So definitely those cash flows are bound to come. It's only a matter of the restrictions which have been imposed by the government. And if we just take out the school challenge, we think that we have adequately provided for our credit costs for the coming next 16-12 months.
So when you talk of 4.6 crore that we have provided until now, it is both for the schools and also for the SME.
Yeah.
Okay. But if there is a possibility of a 10 crore extra on the credit cost side, the schools don't reopen.
Even the 60%, schools are closed everywhere. 60% are paying, in spite of cash flows are not coming from the school, maybe from the other sources of the promoters. And as and when they see that their accounts are becoming NPA, so most of the borrowers will not make those accounts NPA. They may be delinquent to 30 to 60 days, but everybody is prudent and they don't want to be an NPA. So, and the kind of feedback we are getting and from our team is also that we are very cautious of not becoming an NPA. And the other thing we have to learn that school as a segment we can't write off that it will not come back. Yes, definitely because of the restrictions and the customer is not allowed to operate. So definitely there is a challenge in the immediate period. But to say that this 10 crore provisioning has to be made, if that may be the case, we will do that. We have been very prudent and aggressive in making provisions. But at the same time, we do think that these borrowers will come back as and when the segment is allowed to open.
So my next question is that before, in pre-COVID times, the real estate sector was anyways under deep stress, and the rate of borrowing for retail versus for real estate lending, wholesale lending, were different. So do you still see that going on right now? And how is the rate of borrowing for retail versus for the wholesale segment?
Yes, definitely. Now the borrowers are a little more cautious and for the going for the IRRs which used to be earlier 17 to 18%, going forward it will be anything between 16 to 17%. But at the same time, our credit cost has also, the borrowing cost has also come down. So
both the retail and wholesale, or are they different now?
Come again, sir, please.
No, I'm asking the cost of borrowing for retail versus cost of borrowing for wholesale. How is it now, and how is it looking?
Cost of borrowing for my customers or for myself?
No, for CSL, the cost of borrowing was different for the retail, right? And it was different for wholesale.
No, none of our lenders have seen that way. They are seen as a company as a whole. So there was no specific cost of borrowing for our retail segment or for our wholesale. So that has not been the case with us till now.
So the lenders are totally fine if what we borrow, we lend it to retail or we lend it to wholesale?
There is not a single restriction from any of our lenders to just to lend to retail or just to lend to wholesale.
Okay. The third question that I have is that, we have done retail and wholesale has been the initial or the primary, let us say, we were a wholesale lending company and then we entered retail. And over the last 2 years, we have seen that, our wholesale has done much, much better. Irrespective of the market conditions, we have done far better in wholesale, whether it is in terms of IRR, cost, or whatever metric you took. Going ahead, would our focus be more on the wholesale side or more on the retail side?
Yeah, I would say I would love to be in the wholesale, but at the same time to mitigate our risk and to build a presence on the retail. So we want to be in the retail. We have chosen a domain where we don't see that too much competition coming from the larger players in terms of. So we just want to build the domain knowledge in that segment, and for the learning what we have got during last 3 years of lending into retail, now we are much more confident on the retail side also. Yeah. Otherwise, wholesale has been our bread and butter, and we have been able to perform. So it has been always been dear to us, and going forward, our focus will be on both the segments. So we want to have a right mix, maybe of 60-40 going forward.
60-40 in favor of wholesale is what you're saying? Or?
Yeah. So that you will be there, I think, for next 2-3 years.
So last question that I have is that, some of the erstwhile, aggressive lenders like Edelweiss or Piramal or, JM, these guys have now kind of started to shrink their books. Some of them are also out of the market. And if we really want, we can grow our wholesale book really fast at this point of time. Do you see at what kind of debt equity ratio are we comfortable with, and when will we be raising equity capital? At what level of debt equity are we looking to raise capital, and when do you see that happen?
Because not definitely, we are not looking to raise any capital in near future, I think next 1 or 2 years. First, we want to build a reasonable debt equity ratio, which is very, very low till date. And there was little apprehension.
What kind of debt equity are we comfortable with?
What we have kept in our mind, we think that 2 to 2.5 times on our wholesale book and 4 to 5 times on our retail book should be the right kind of mix. So, because the wholesale still and the receivables sometimes become lumpy, sometimes so they can be cyclical. So because of those reasons, we don't want to go beyond 2 or 2.5 in the initial phase and 4 to 5 times on the retail side.
And are we looking to grow our wholesale book outside of NCR, because NCR has been
Definitely. We are trying to grow, even we have done few lending in areas around Chandigarh, Mohali, Panchkula and all those areas, even something around near Dehradun, around that to Uttarakhand, and even we can look at in Rajasthan. So just for sake of diversification in terms of geographical spread, we don't want to go, because when we have size, we will definitely go into new areas. But till if we have opportunities in our own area, so it is make more sense to remain there, because one thing is there, this segment requires a lot of domain knowledge about the area, and post lending you have to monitor it very closely. So unless until we have a size, we have to have a good team around that location station permanently to look into a new location. So definitely we have for understanding the new areas, we have done few projects in those areas so that we start getting understanding of those areas. Going forward, as and when our size grows, and we will definitely go into those few of the pockets which I have told you just now.
Thanks, Rohit, and all the best. Thanks a lot.
Thank you very much.
Thank you. Ladies and gentlemen, this was the last question for today. I now hand the conference over to Mr. Rohit Gupta for closing comments.
I would like to thank everybody for participating into our this first half con call of CSL Finance, and we look forward to see you after March results, and wish you all a very healthy and a safe year. And thank you very much.
Thank you. On behalf of Kannav Capital Advisors, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.